switching gears a little bit to another section of the OBA, and that's Social Security. So President Trump mentioned that, hey, we're going to make Social Security untaxable during his campaign and an eventual successful election. But I also know that it ran into some of the reconciliation and some of the parliamentarian issues that are there with how Congress now passes laws, which is a whole separate topic about how our system is relatively broken and they only have one bite of the apple, which is the reconciliation process. But part of that legislative work is the fact that it can't sort of impact and raise budgets too much, and honestly, it's over my head. So long story short, he couldn't, or the Congress was unable to flatly say that Social Security is not taxable. However, they did include in a provision that specifically targets Social Security. And Alina, what is that?
Yeah, so probably a lot of people still like in social media or on the news that Social Security is not going to be taxable. So I was curious about that. And it's very misleading because what is in the bill has nothing to do with Social Security benefits, and I'll explain why. What happened, the additional deduction for seniors that is in effect this year and will go away in 2029, so 28 will be the last year, was introduced like non-taxable Social Security benefits. How it works. So for those individuals who are 65 and older, they can now use an additional deduction of up to $6,000 per individual. But wait a minute, it wouldn't be so easy. So if it phases out when income for an individual tax filer is above $75,000 and for a married filing jointly, $150,000. So when the income goes above that threshold, this deduction gets reduced. For example, if we have a household with $85,000, the single filer, the $6,000 deduction now becomes $5,400. If we have someone with $95,000, now $6,000 goes down to $4,800. And so on. And when the single filer earns $175,000 or above, the deduction just disappears. Why is that? It has nothing to do with Social Security benefits because it's not linked to Social Security benefits. So, for example, as you know, individuals can start claiming Social Security benefits as early as 62. So they can claim Social Security benefits, but they will not qualify for this deduction because they're not 65 years old. Again, you can also delay claiming your Social Security benefits until age 70. So if we have an individual who is 65 qualifying for this additional deduction, but they're not claiming Social Security benefits, it's not going to do anything to those benefits. So it has nothing to do with the Social Security benefits.